Hello, Mountaineer Nation and College Football Nation. As you may recall, in my last episode, I broke the news about the pending Power 4 college athlete deal with regard to revenue sharing, a $2.78 billion deal that's been proposed, that's on Judge Claudia Wilkins' desk. And that was big news. The final approval will come in April, if it's to be. You still got another month and a half to go on this. And it's hats off to the players that are finally going to get paid. But just like anything else, there's the good and the bad. That's the macroeconomic picture. $2.78 billion going to Power 4 athletes. But there's only a couple of catches there. One, it doesn't really give you the realities of what happens when it's finally approved. There's things that happen after that. When you get to $135,000 as a men's basketball player, or a men's football player, or a women's basketball player getting $35,000, what does it mean? Well, I've been in the business of educating athletes for a number of years. I was in the player representation business for over 20 years, educating athletes on their financial affairs. It's all about the education. I loved educating athletes because I was very much interested in not only their financial gain, which is $2.78 billion you're looking at in a macro sense, but making sure that they were financially stable. Because just because you have a financial gain doesn't mean you're financially stable. And there's a lot of responsibility that goes to handling money for the first time if you didn't have that walk-around money at the beginning of your college career. So there's a lot of responsibility that goes with that, and there should be a lot of player education. And that's what I specialized in. So when I went to look at the $2.78 billion deal, I decided to break it down like the X's and O's in basketball, as well as in football, the playbook. You got to know your playbook. You got to know the X's and O's, or the coach is not going to put you on the field. So the things that I'm worried about is that when young people, 18 years and up, get their first big paycheck, what are they going to do with it? How are they going to handle it? Are they going to play as hard at the collegiate level? Are they going to be chased by bad people just after money, being told stories? Are they going to spend their money wisely? Are they going to save it wisely? Are they going to make big time decisions with their money and still concentrate on their books as well as the playing field, the sport which they profess to love? And I had a lot of athletes. I have street cred. Hall of Famer Chris Doman, one of mine, the late Chris Doman. Marvin Harrison, Sr., his son is dynamite in the NFL. He was a financial client. Dennis Scott, NBA TV, one of mine. All of these were great basketball and football players. Ray Lewis, Hall of Famer. Harrison, as I said before, Hall of Famer, and Doman was a Hall of Famer. But I wasn't that much concentrating on that as I was with their financial stability. So when I look at $2.78 billion, it looks good and it looks big to athletes. And I want you athletes that are listening to this is to share this with your fellow athletes. Education, responsibility. You're becoming businessmen. And it's no joke. It comes with a lot of responsibility. You need to be educated. You need to be educated quickly, because you don't want the wheels to come off just because you made some money. You want to be smart. You want to go to your advisors around the facility or whatever. Yes, I'm a consultant, and I did it for over 20 years, and I'll say it again, of creating, help stabilizing $1 million earnings to $1 million in the bank. That's just what it's all about, consulting. So on this day, we're going to start at the ground level. So when you get your first $135,000, remember, number one, you're not an employee. So the university is not going to be withholding any taxes from your payments. I will say it again. When you get your first payments, whether it's going to be in a lump sum, $135,000, or whether it's going to be paid during the football season or basketball season, however they deem to pay it, there is not going to be any withholdings. This is based on nil income, name, image, and likeness. Endorsement income is not W-2 wages. It is 1099 income. Hear me again. It is not W-2 income. You're not going to have an employer withholding any taxes for you. The university is not an employer. The NC2A is staying away from that. You're not employees. You're independent contractors, meaning this money you're getting is like business income. And what happens? You have a partner before you ever spend one dime. And that partner is the Internal Revenue Service, the state of West Virginia in this example. Self-employment taxes. So you have a partner, so you have to be careful as a businessman. I don't know how the NC2A and the Power 4 schools are going to set up their system. But yes, I'm one that could help them set it up because I've been in it for years. But getting back to the point, you're going to have $135,000, let's say, in your pocket if the approval goes through in April. It'll probably hit in the fall. So you've learned some things right now. You're not a W-2 employee, so nobody's going to withhold taxes. You're a 1099 businessman making business income off a name, image, and likeness. So what does that mean for you in making $135,000? Well, let's see how much your partners get. In men's basketball and men's football, if you're making $135,000, then this is what's going to happen. In basketball or football, you will owe the federal taxes of $14,256. So that's your federal partner. You'll have another federal partner. You will have to pay self-employment taxes on that income. So what is that? Well, let's take a look at it. Self-employment taxes, $20,655 you will owe them. And state taxes in the state of West Virginia, and I'm just using West Virginia as a state tax. There's universities, Power 4 universities in many states in the nation. I'm just using West Virginia University. I was born and raised, of course, in West Virginia University, and I went to West Virginia University. I'm a double graduate at the West Virginia University in accounting and law. So you will owe $5,224. All in all, your total tax bill will be $40,999. $135. And what is being left of income or disposable income or your cash flow after taxes? $94,865. All of these are just estimates because we don't know if those numbers will hold up for Power 4 basketball and football players. But even this $94,000 has to be used wisely because some of that is going to be for estimated taxes for the next year. So this is about consulting and this is about education. You learned a lot already that you have a business partners. It's called federal taxes, self-employment taxes, state taxes. This is what you're left with. But there's more to the tax issue that you don't see and it's too complicated to explain. You will have estimated tax payments, so some of this will be for taxes for the next year. But don't concern yourself so much right now. I've just shown you in Playbook 101, that's your partner. So we can talk about $2.78 billion all we want to. But you're going to have a partner when you get that money. So you're going to have to act wisely and look for pitfalls, which I'll be talking about on my next episode. And when I look at the women, same deal. Right now, they're going to get $35,000 women's basketball. Out of that $35,000, federal taxes will make up $1,279. State taxes, West Virginia, $915. Self-employment taxes, $5,355. You're going to have a total tax bill, young ladies, of $7,549. So you never spend it all in the same place. You will have money left after that, but some of that will be for estimated tax payments. You've been going to school on a scholarship, tuition and books, having some expenses paid, having some loans taken out. Now you're coming into a new arena. You're going to have money that people in the past did not have in coming into college. Good things can happen, taking care of some family members. But the one thing you got to understand, you got to take care of yourself first and be right legally and financially. You don't want to be going through school owing taxes. Your deal is to play the best on that football, basketball field and court. And to also make good grades and get ready for your life after the sport. So you're going to need that money. And you got to be responsible on what you spend it on. If you spend it on something of a car, you've got to act appropriately. You don't want to get drunk with the love of money. That's what this is about. So what I've taken you through very quickly, that you have a partner. And you will need to share this video, repost it, talk with your fellow athletes, college athletes, female and male. Talk about it. Discuss it. Look at this video over and over again. And that's what they don't teach you in college. It's called financial stability. It's not all about financial gain. And that's my first lesson on the $2.78 billion deal, breaking it down for you. You're not going to get this anywhere else, and they're not going to talk to you like I'm talking to you. So you need to get yourself motivated to be educated, like you learn the playbook. You learn the plays on the basketball court. You know your teammates. You have to have an understanding of the great opportunity that you have here to get things done right. I'm open for all questions. I look forward to your comments and more discussion. I will be reaching out, but I don't want anybody to take this video and stuff it in the closet somewhere. You need to be sharing it with your teammates nationally. That's what this is all about. Responsibility. Because I dealt with professional athletes all my life, 7 figures. Y'all are working with 6 figures. But it's equally as important for me to see college athletes and young people to get somewhere in life and not in a bunch of financial and legal entanglements and bad decisions that can go wrong because you don't know how to handle money or money went to your head. So this is what it is and breaking it down. So you know who your partners are right now. So I look forward to hearing from you. I do want to hear from you. If you're adults watching this, show it to your kids. This is what it's all about. Share it. If you're a college athlete, I'll tell you again, share it with female basketball players, your fellow football players and men's basketball, whomever. Share it. Share it. This is about education. And I'll be talking to you more about the pitfalls as we go. But that's an area that the federal courts are not going to police, is what happens when the money hits the street. The coaches don't have a playbook for this. Your advisors don't have a playbook for this. So a lot of people don't. I've been in this world, like I said, for over 20 years. I've educated the best. Right over my head, number 88. So I know what I'm talking about. So this is C. Ivan Franklin at Be Frank for Real. One minority voice, one view. It's all about financial stability and not financial gain. The $135,000 and the $35,000 is about financial gain. It looks good. It's exciting. But you have a responsibility as athletes to get it right. And do the right things. So I'm passionate about this because I've been in this world of the athlete, professional athletes. I've seen them go from college to pro and make money. And I've seen good things that's happened, and I've seen bad things happen. So I'm giving you what I've got now at the college level. And I've got plenty where this comes from, because I've not only did it by consulting with athletes and them being my client, I've worked it through with them to make sure they're going in the right direction. And that's what it's all about. It's not about me. It's about you and your future. You're young people, so it's time to look at it and get it right. And all I can say at the end of this is, go! Mountaineers.